Hello traders, Gary Wagner here. Approximately 11:30 in Honolulu, 5:30 in New York. It is Monday, November 26th, 2018, and this is the Daily Report for Gold and Silver. Nominal moves in the precious metals markets today, with a risk-on market sentiment prevailing across the board in all the indices. Gold closing down fractionally lower, 80 cents lower at $1,222.50. Silver also had a slight decline of about 5 cents on the day. $14.19 is the current print. Platinum and palladium were both bid higher. Now that's all within the headwinds of a stronger U.S. dollar. Dollar currently up about 17 points at 97 even. In terms of the indices itself, the NASDAQ Composite did the best, up about 2% at 7081. The Dow Jones Industrial Average gained 354 points. And lastly, the Standard & Poor's was up 40 points at 2673. Traders, as you can see, today's move in gold was fractional at best. When we look at our daily candlestick, which is this one right here, what we can see is that it was a very, very narrow range between open and closing prices, with the market closing down about 80 cents on the day. There's a couple of noteworthy things, though. The first thing is that the lows that came into the market remain above what I believe to be critical levels of support at about $1,218. That is based upon the 0.618% retracement. Of course, that's from a fairly long data set. That data set beginning at the end of 2016, when the market was trading at around 1124. That would be this area right here, up until these highs that we saw occur multiple times at roughly $365 to $370 per ounce. What is most noteworthy, though, today is the fact that when we look at our moving averages, what we are seeing is the 50-day short-term moving average really looking like it's just about to cross above the 100-day moving average. That, of course, is a shorter-term golden cross, but that would be very bullish for gold. Right now, what we want to look to do is to position ourselves from the long side, seeing that gold is holding above this particular price point. It's all going to come down to, I believe, the exchange between the Chinese government and American government at the G20 meeting that's going to take place later on this week, I believe this weekend. That will really move the market one way or the other, but solidly higher or solidly lower. Because if they're able to come to some sort of an agreement, we would see a pretty dramatic decline in the U.S. dollar vis-a-vis gold would raise. And the opposite, if that occurs, we would see dollar strength, and therefore, even for gold to maintain any kind of stability, it would be like a salmon swimming upstream. So we're still going to look to position ourselves from the long side, and I believe that all the indications that we have seen recently are very bullish for gold. Traders, lastly, I do want to take a quick look at Bitcoin and Bitcoin futures. Bitcoin futures down $540 today, now breaking below 4,000 at 3650. We can see the dynamic move that has occurred over the last couple of weeks, and my sense is we could see it go dramatically lower from here. We're in new territory at this point. As you know, my basic take on Bitcoin futures is for those that have physical Bitcoins, Bitcoin cryptocurrencies, they should be looking at the futures market as a way to protect yourself on these downside moves without actually selling your Bitcoins. So for those that do have Bitcoins and want to learn more about hedging them in the futures markets, please just email me and I'll be happy to address that personally with you. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.